Welcome. Today we're talking with JJ Slygh. He is the principal product marketer at Total Expert, a customer engagement platform company. JJ, welcome and thank you for joining us at today's Banker Digest.
Yep, thanks for having me, Larry.
Great. Okay. Well, JJ, so what are the challenges that you see banks have to grow home loans organically from their own customers?
Well, I think one of the biggest things as we work with banks and talk to banks is that the data that they have on their customers is segregated. There's mortgage data in one spot, core data in another, and they don't necessarily talk to each other.
Right.
So without that consolidation, it's hard for them to really have a true understanding of that complete picture of that customer and what their needs are.
Right.
I know even in some cases when I used to work at a bank that we had trouble even identifying whether someone was a homeowner or a renter. And so when these things are sitting in different places, it's hard for the sales team, it's hard for the marketing team to really understand that customer and understand where those needs might be when it comes to home lending or even other types of lending. So marketing and sales are trying to rely on different things to gather this information, different spots, different places, and pulling together can be difficult and takes a lot of time.
Great. Well, thank you, JJ. So, once that data is all kind of together, how can banks develop actionable insights from their customer data?
When you bring that data together, definitely, like I said, that 360-degree view makes such a big difference when you're trying to really understand your customers' needs and anticipate needs. So some of the simplest things you can do when you have that data together is looking at a customer's segments that say, maybe they've got people have checking accounts with $10,000 in balances. And most of those customers have a savings account and maybe a credit card. Well, suddenly you can look at the smaller group that has over 10,000 in checking and say, well, they've got checking, they've got credit card, but a big chunk of them don't have a savings account. So that's a simple high-level solution to say, there's a group of people that we can maybe talk to about having a savings account because other people like them tend to have that as that product with them.
Right.
So that at a high level, when you have that data together, you can do those type of things. But then there's another level that you can get to, and that's where you have insights being delivered, triggering things that notify the bank that are outside of the transactions that are doing within the bank. And those type of things are like these mortgage insights and mortgage alerts that are out there and available for the same customers you have in your database. So monitoring your consumer database or your mortgage database, you can be alerted if they put their house on the market. You can be alerted if their house goes up for sale. You can be alerted if rates drop below a certain point that matches their mortgage that they have. And in this situation right now, of course, rates have been going up, so that's not as likely right now. But in the long term, if they close their home loan at 4%, rates drop below that, you can be alerted, so you can know now that it's time to reach out for them for a refinance. Or if they've been in their home for a while and they built up enough equity, you can be alerted that they've reached that point based on their payment history, based on their current home value, to suddenly be eligible for a home equity loan. And these are things that are happening not necessarily within your system, but you can be alerted to that are important for that customer and things that are happening for them. So anticipating their needs, or when they're raising their hand saying, I'm looking for a new home, you can be alerted to those things and be part of that support to find solutions for them, as opposed to just finding out after the fact.
Right. That's interesting what you're talking about there about the trigger events. So thanks, JJ. So once banks have the data-driven insights that you've described, and I'm sure many others, how can the bank transform the marketing and sales work to ultimately increase those loans?
So yeah, when you get that insights being delivered to you on a regular basis, you can take action on it. But that's where it becomes tricky, because at scale, when you're trying to do this at scale, it can be difficult, because if you get so many alerts in, you might not have the manpower to take care of it. Your marketing team is already plenty busy. Your sales team is already plenty busy. But these are high quality insights, high quality leads that you want to take advantage of. So with the right platform, similar to what ours is, all in one, those insights can now trigger automated journeys. And what that means is emails can automatically be delivered to these customers because we know their email address. We know this insight has delivered to them, and we know what the insight was. We know what to talk to them about. Not only can it do that, it can also alert a salesperson on what their next step should be as well. So if they should reach out, and in many cases they should, that human outreach is critical nowadays, and people still value it and appreciate it, not just getting the email, but also getting a reach out. But the importance of that, so if they did a mortgage inquiry, that's an immediate one. That requires somebody should reach out right away because they're actively looking at buying a new home. In the case of home equity, that one doesn't need immediate, but it should be looked at because the person needs to decide whether a home equity is right for them at the time. But those type of things, that they're eligible, or they're doing something, these journeys can kick in and start nurturing that relationship even more by tying in email, even text messaging, but also that human interaction. So you get a trigger in that says somebody has raised their hand and said they're getting their mortgage checked. Suddenly they're also getting an email from the bank saying, hey, if your needs have changed, or if you're looking for help with financing a home, we can help you with this. They received that call the next day saying from a lender saying, hey, I'm available if you need help. Sure enough, they should look at it, because we find that people tend to look at 2 to 3 different lenders when they're getting a home loan. So you have an opportunity to capture that business.
Yep.
So if they put their house on the MLS, that's a big one, because they're more than likely going to buy a new home. So again, you have that opportunity to reach out and say, hey, we can help you with financing your new home if that comes around. And there's also residual financial benefits to communicating with that customer. What we've seen from our company is that typically after someone buys a home, within 3 months, they are getting a credit card because they need to buy furniture for the home. They need to do some other expenses that they don't have the liquid dollars that they did because they just used it on a down payment, but there are things that they want to buy within that first 3 months. So they usually rely on a credit card. So again, that's something that the bank could help them with. Within 6 months, most of the time they're buying a new vehicle. And if you think about upgrading your home because of family, your vehicle usually follows suit. And you probably don't buy that vehicle just before you buy a home because you're trying to keep your finances in a certain state. But within 6 months, they're buying that new car. So now you understand when you get this alert, this trigger that someone is raising their hand saying they're buying a new home, you don't just have to stop with that. You can stop and help them with credit card. You can help them with auto loan. So suddenly you're anticipating some needs that they have and really being the financial center for them for all their financial needs.
Thank you, JJ. It's very interesting how combining internal customer analytics with external data can create powerful indicators for when a customer is likely to need a bank's product. So thank you for spending time today with today's Banker Digest.
You bet. Thanks for having me. I appreciate it.
Great. In closing, thank you for joining today's Banker Digest. If you have additional questions for JJ, please see the link in his bio.